Hi everybody, I'm Steve McDonald and this is your Investors Daily Edge midweek market update. In focus today, the S&P's best month, profit warnings, the dollar, the euro and gold, housing, transports, and the Slap in the Face Award. The S&P had its best month ever this September. The rally has everybody feeling a little better about the future, and it was the best run in any one-month period in the history of the S&P. But we topped out at around 10.8 on the Dow. We're still range-bound and still ideal for the dividend-paying stock strategy we've been espousing here for some time at IDE. Stick with quality in this market and buy dividends to wait this thing out. We may be range-bound for some time to come. Profit warnings. Many companies are issuing warnings about the upcoming earnings season. It seems the economic slowdown we've seen for the past few months will show up in some of this quarter's reports. Alcoa reports October 7th, and that's the start of the season. Now, I'm not encouraging buying puts right now. I don't know how bad this is going to be. But you might want to consider some short-term profit taking here to get a good cash position for some buying in the next few weeks. It may be an opportunity to pick up some bargains as we get the short-term earnings disappointments it looks like are coming our way. Gold, the dollar, and the euro. If you followed my recommendation a few months ago and shifted your focus from the dollar that was running up then to the euro that has since run up against the dollar, you've done quite well. But it's almost time to shift gears again. The euro isn't topped out yet, but it's close. It has a little more room, maybe as high as 140, maybe some people are saying 150. I seriously doubt that. We could see 140 to 145. I doubt it's going to hit 150, but it is time to start thinking about taking some profits on the euro. At the same time, gold has had a very nice run as the value of the dollar has slipped. This too may be taking a break as the dollar-euro comparison levels out. Gold is still a long-term upside play, but look for its recent hot run to cool and drift back. Rusty McDougall says it's a buy at about any price, but I'd look for some weakness here. Housing. Are you sick of hearing me talk about housing yet? Buy when there is blood in the streets. If you learn nothing else at Sound Profits, take that with you. Prices in July in half of the surveyed cities showed increases around 3.2%, and San Francisco had an 11% jump in property prices. That's a huge move. Also, prices on average have increased now 5 months in a row in the survey. This week, a housing analyst for Citi said the home builders that I've been talking about are ripe for takeovers right now. They have very depressed stock prices and lots of potential when this thing turns around, which it will. He mentioned Ryland, Beazer, Toll Brothers, Pulte, and Meritage, which is a new one to me, as potential buyouts. Pulte and Beazer were listed as the best prospects. Now, these names should sound familiar. I've been talking about them for months. Don't wait for the good news to start popping. Buy these puppies now. Transportation. Oil tankers are very hot. I don't mean hot in terms of fire, but they're hot. There is a growing demand for offshore storage, and oil tanker stocks are very hot right now. Limits on offshore drilling are driving the demand. It's simple, really. We have to ship more oil if we can't drill near our shore. Add to this very good numbers from the dry bulk shippers, of which 50% of the demand comes from China, and we have a hot transportation sector right now. This one is a very good leading sign of business activity to come. And finally, the Slap in the Face Award. I love this one. I fell out of bed laughing when I heard this. Fear not, America. Things are turning the corner. Why am I so confident? We finally have a trade surplus with China in one area. Chicken feet. I'm not making this up. Just when you thought there was no sunshine coming, the news breaks that we, the US of A, grow the biggest chicken feet in the world, and the Chinese love them. It seems we have bred our chickens to have huge breasts, since in the US, it's the most desirable part of the chicken. Their feet have followed suit and have gotten huge too. When it comes to chicken feet, size does matter, at least to the Chinese it does. So rest easy, everybody. Poultry may yet save the day for our country. That's about it for everybody here at IDE. I'm Steve McDonald. Thank you for being a part of us.